Let's go to the trading floor in Chicago and find out what's going on direct with the traders that are doing all the market action there on the trading floor. We have Tim Evans there. He's with Longleaf Trading, and he joins us right now. Tim, what's the mood on the floor here today in the grain trade?
Hey, Marlin, nice to be with you. Yeah, I mean, we came in a bit of in a risk-on mood. The dollar had a pretty sharp pullback last night, following the results of the first French election. So the euro got caught a bit off that, which brought the dollar lower, ultimately, being a benefit to commodities as a whole. So I think the grain complex initially was benefiting from that, and, beans are still hanging in there, corn trying to hang in there. At the end of the day, though, as the market kind of shifts back to, fundamentally what we're looking at, I mean, I think it's going to be a tough road for soybeans to take higher. The supply side situation, in my view, is still so burdensome that, any risk-on move that we see that drags the market higher, I mean, I think that's a selling opportunity.
Well, I just wanted to ask you how far they can separate themselves from the corn at this point in the game here. A lot of this is kind of keeping one eye on the weather outlook, and it sounds like, boy, there's going to be a lot of rain in the western half of the Corn Belt by next weekend there.
Yeah, I mean, it's been wet already, more coming. And it, as you indicated in your weather update before I came on, it's going to be a little heavier than what we've seen. So the million-dollar question is what kind of impact that, could have on the soybean and corn market. As we continue to push forward here in the spring, if we're not able to get a lot of this corn in the ground, obviously that leaves a risk that some of those acres can get moved over to soybeans, which already is, struggling with a, record number of acres that are going to be utilized here in the U.S. this year. So, I mean, that's a big risk here as we continue to move forward into May.
Well, Tim, as always, good to visit with you about what's going on in the grain side of things. And if you don't mind, I want to bring you back here in just a moment, and we'll talk about the livestock side as well, partly because we have some new information that just came out as far as our cutout values, but I wanted to get your thoughts on the upcoming cold storage report as well. That'll be out after the close today. So Tim Evans is our very special guest. He's with Longleaf Trading. We'll have more with Tim when we come back.
We've got teams all over talking about low salt, micronutrient, high-efficiency fertilizer teams like it's something new. What's your take?
I tell you, Don, AgroLiquid team has had these technologies for over 30 years.
And really unprecedented application versatility, compatibility, and ease of use. So they're your pick for the championship season?
You bet. Their full line nutrients is going to take them all the way to the root zone.
They're my pick, too. AgroLiquid's going all the way.
It's time for the Can-Am Spring Fever sales event. Get a cash rebate of up to $3,000 on selected models, or get the Outlander L starting at $54.99. Visit your local dealer for details. Can-Am, the ride says it all.
Riding is a lifelong sport, and I plan to do it well into my 80s. Knowing how important posture is and how it declines with age, I've made it my #1 priority in horsemanship. I'll share some tips with you to help you find a more youthful posture.
Well, we're talking right now with Tim Evans. He is with Longleaf Trading, and he's speaking to us live and direct from the trading floor in Chicago. Sounds like on the grain trade, things have really simmered down. Not a whole lot going on here today, Tim.
Yeah, that's absolutely right. Again, the market got off to a good start, but it was more of a macro movement. Today is going to obviously be important, as the planting number comes in this afternoon for corn. That's something I'm really keeping my eye on. Last year at this time we were at 28% complete. The market today is looking for between 12 and 15%. As we go into May 1, history shows that we should be about 30 to 33%. And if we're not, that could cause, could have a negative impact on yields potentially down the road. So I think the market, should be paying close attention to that this afternoon.
Well, with that in mind, we have that new information that came out from USDA a little bit ago on the livestock side. We had our new cutouts that came out at midday. It was a split decision on the beef side. We had the choice cuts going up by 71 cents. The select cuts were down 17 cents at 203.72. The futures market on the cattle complex didn't really seem to care when those numbers came out. They didn't hardly move one iota. They were still solidly lower across the board anyway, and now they seem to be even drifting a little bit lower lower as we go. June live cattle down $2 at 114.70 right now. August down 2.16 at 110.62. They seem to be increasing the downward pressure as we go. Feeder cattle right now, you have your May contract down 203 at 137.22, and you have your August down $1.95 at 140.30. Those are both about 160 to 170 off of their earlier highs today. Tim, overall, when you look at this cattle complex, the way it's performing today, some folks were expecting a bit of backing and filling in the market because it had gone so far over the past month or so. But do you see more downside potential, or do you think this will be a one-day correction here?
I mean, I think it could possibly spill over into tomorrow. I mean, the fact remained, as we came in, if you look at traditional, technical indicators in the market really had gotten to be extremely overbought. Common ways of looking at it, if you look at RSI, for example, I mean, that was coming in at 83, which indicates the market being extremely overbought. So, I think the back and fill action is to be expected, especially following the numbers from last week. What really stood out to me was that placements number. I mean, that was much higher than expected. But again, there's still a steep discount from June to cash, and I think we're probably going to see some strange market movement while we ultimately looking to see some convergence in that cash and futures price here as we move on over the next month.
Lean hogs are going the other way, though, and on the pork carcass cutout values that came out today, everything was a little higher on the primal cuts. The June lean hogs right now 58 higher at 68.90. July 40 higher at 69.92. What do you think? Can they finally get some traction here?
Well, I mean, we're probing the lows, and I think really that's what the market is just trying to sniff out, where the value ultimately is in the market. Obviously the cash market has been very poor here over the last couple of weeks. One thing I think that is striking is the pork product markets actually have held up pretty well. So I think a lot of traders, are looking at that could be suggesting some better demand than what the market actually is expecting or pricing in currently. A point of note that definitely is worth taking a look at is, China also has been a very large importer of livestock here, but it's mostly coming from Europe and Canada. As the American prices have gotten more favorable relative to Europe and Canada, we possibly could see some of those exports shift, from the United States. So that could be a demand side variable that helps the market here over the coming weeks.
Tim, real quickly here as we wrap things up, thanks for the comments, and it sounds like you had a big event in the family today, too.
Yeah, I did. Beyond the grain and livestock markets, it's my wife's birthday today, so I'd like to wish my wife a happy birthday. I love you. Have a good day.
There you go. Brownie points assigned. Thank you very much for the comments today. Tim Evans with Longleaf Trading in Chicago. How about that?